Because the treatment of overhead is probably the most difficult concept to grasp in this chapter, let's work a review problem. KA Catering uses a job order costing system to assign costs to its catering jobs. Overhead is applied to each job based on direct labor hours. Listed below is data for the current year. Budgeted overhead cost, $90,000. Actual overhead cost incurred, $77,000. Budgeted labor, $100,000 for 10,000 hours. Actual labor, $95,000 for 9,000 hours. Determine the amount of overhead applied to work in process during the period. To apply overhead, we need to know the predetermined overhead rate. Because it was not given to us, we will need to calculate it. If you'll recall from your notes, the formula for overhead rate is budgeted overhead cost. That's all of your factory rent, factory insurance, factory depreciation, supervisor's salaries, all of those things added together. And you divide by the activity that drives the overhead cost. We were told that budgeted overhead cost is $90,000, and we were told that overhead is allocated based on labor hours. So we will take $90,000 of overhead and divide by 10,000 direct labor hours, and we get an overhead rate of $9 per direct labor hour. So for this company, every time direct labor works an hour, we'll pay them their hourly rate and we'll assign $9 of overhead to inventory. Now to apply overhead, we'll take the predetermined overhead rate and multiply by the actual direct labor hours. So we'll take $9 per direct labor hour, and you'll recall that the actual labor cost was $95,000 for 9,000 hours. Since our rate is per labor hour, we need to multiply by labor hours, and it is the actual activity here, and it totals $81,000. Now, what you want to notice is that this overhead applied is an estimate, but it is an estimate that reflects what it should have been given actual activity. So we know three numbers about overhead. We know that it was budgeted to be $90,000. It actually came in much lower at $77,000, and we assigned $81,000 to inventory. If you'll notice, activity was supposed to be 10,000 hours, and it was only 9,000 hours. Therefore, because activity was lower, this way of assigning overhead costs automatically adjusts for the lower activity. That $90,000 of budgeted overhead is never recorded on the books. It is simply the number that is used to calculate your overhead rate. Now we're supposed to calculate the underapplied or overapplied overhead for the year. To analyze overhead, it's a good idea to set up the T account. Your actual overhead costs will be on the left-hand side or debit side, and applied overhead costs will be on the right-hand side of the account or the credit side. We'll look more at that at a later time, but for now, this is the best way to set it up. And we were told that actual overhead costs were $77,000. So that's what would go on the left side of the account. That is what we should have assigned to inventory. When you look back at what we just calculated in number 1, you see that we actually assigned $81,000 to inventory. So we overapplied or overassigned cost to inventory by $4,000. And last, it says, assume 2 jobs were sold during the period, job 10A costing $200,000 and job 12B costing $100,000. What is the cost of goods sold before adjustment? What is the cost of goods sold after adjustment? Well, before adjustment, Because they gave us the job cost, we know that cost of goods sold before adjustment is simply $200,000 plus $100,000, or $300,000. Now, after adjustment, that will reflect the adjustment to close out the overhead account. Remember that it was $4,000 over applied. That means we over assigned cost to inventory, and so now we need to decrease our cost of goods sold by $4,000 so that it reflects the actual cost incurred. So overhead applied is used throughout the period because overhead costs are not necessarily known at the time of production, and even if they are, they're hard to assign to every unit. But at the end of the period, we need to adjust our records to reflect what actually happened. And the idea is that we eventually will sell all inventory, so we'll do what's easy and just close this to cost of goods sold.